you are looking at the Bitcoin price versus the crypto fear and greed index overlay. And what it tells us about where we are right now in this cycle. Because when you overlay price and emotion, you start to see something very uncomfortable and possibly very important. Because this chart shows about 2026. So on this chart, what are we looking at? Well, the gray line is basically the index. The orange line is Bitcoin priced. The timeline runs from 2018 through 2026 along the bottom. And the left vertical axis shows the index 0 to 100. The right vertical axis shows the Bitcoin price. This is what's key. When the index is below 25, we are extreme fear. Between 25 and 50 is fear to neutral. 50, 75 is greed, and over 75, extreme greed. The green shaded area at the top represent extreme optimism, and the red represent extreme panic. So it's a psychology indicator, really, and markets are driven by psychology. That's why it's very difficult to predict the market. But I guess you could predict that it is unpredictable. So now watch this very carefully. Every time the gray line spikes into extreme greed, shortly after the Bitcoin peaks. When it goes into it starts going down, so does the cost, the price of the crypto. Look at 2019. You see how low the price went? And then you have also in 2021, and then you also have late 2024, and of course you have now. The emotional peaks come before price exhaustion. Now look at the opposite. When the index collapses into extreme fear, 2018 bottom, and then you have the 2020 crash, the 2022 bear market, further to the right, all these collapse in the gray zone, in the red zone, and what appears to be happening now in 2026. Those moments tend to align with price stabilization or major bottoms. Look what happens in 2020. Let's say 2020, right? Look at 2020. The gray line, yeah, we're low, but so is the Bitcoin price, the gold thing, the gold line, but that's it. That's the bottom. And it happens again in 2022. At the lowest I get, it's a bottom. So these moments tend to align with price stabilization, not coincidence. Now, be careful now. You're going to say, well, look how high the gold line is to the right in 2026. So it's got to drop. No, it's not going to drop. Well, I don't know what's going to do, but the point is, what you could see is in 2020, we reach a bottom, right? And in 2023, 22, sometime between 2022 and 2023, we reach a bottom as well. But the price, that was the lowest price you got. Although they were on top of each other in 2020, there was more separation between 22 and 2023, but that was the bottom. And maybe if this is true, then where we are now, maybe it's the bottom because we are the highest fear we can possibly get. Maybe it's human behavior repeating. You heard it here first. And don't forget, if you like this kind of analysis, I would like you to subscribe, like it. And if you want to hear me talking every single day for 15 minutes or so into what's happening in the market, join as a member. This is where really learn. You could see what I'm doing, and maybe you could learn a thing or two about a thing or two. So markets don't move because of logic alone. They move because herd behavior, overconfidence, panic selling, euphoria buying. The fear and greed index captures volatility, volume, momentum, and social activity. It's all about greed. I tell you what, if you know anything about EBITDA and you know anything about market capitalization, take any stock. Look for the EBITDA. Divide by the market cap. you're going to see that that percentage is very, very close to 5, 7, 10, maybe 20. And I always tell that to my students, and they're always amazed and say, well, you mean I could take any stocks? Yes. And the more the stocks perform, the lower that ratio, which is basically the equivalent of what the risk-free rate is, what the risk is. But yet, that number is not the far-fetched number. It's always a consistent number. So even though people are trading from all over the world, all different type of assets, there is a language of valuation and risk. And no one has cracked yet, but we know it's there. I digress. So the orange line, the Bitcoin price, reacts after these emotional waves build. Emotion leads and then price follows. So 2018 to 2020, that's a first emotional cycle. Look at 2018. Fear collapses, price crashes, and in early 2019, extreme fear sets in. That is when price forms a bottom. Then greed spikes in mid-2019 and price rallies, but not sustainably. Then 2020 hits, extreme fear again. And that fear becomes a foundation for the 2021 bull market. Now look at 2021. The fear and greed index spikes near the top of the scale. That is extreme optimism. Everyone is bullish. Leverage is high. Narratives are strong. Shortly after that, the Bitcoin peaks and emotions peak before price roll over, and that's critical. 2022, fear drops again. The index collapses toward extreme fear. And what happens? The price stabilizes. Not immediately, but it stops free falling. That is how markets work. Maximum pain leads to base building. 2023, 2024, notice something. Fear does not stay low. It recovers steadily. The gray line climbs. That signals increasing confidence. Then in 2025, we see greed return aggressively. Remember that? It was only last year. Price makes new high. But here's what matters. The emotional spike becomes extreme again, and historically, extreme greed does not last. So now we are in 2026. Now look at the far right of the chart. Fear collapses sharply, and I mean sharply. The index plunges towards extreme fear again. Yet price is not crashing violently. It appears to be stabilizing. In fact, last week it was 1 or 2%. It's staying around 67,000. That divergence is important. When fear collapses but price holds, it suggests selling pressure may be exhausting. So does this mean it's a healthy reset? And that's kind of the Black Swan question. When extreme fear appears while prices stabilize, there are two possibilities. This is a bottoming phase, or there is calm before deeper stress. And in past cycle, extreme fear created opportunity. In past cycles, extreme fear created opportunity. Remember this. But we must respect that global liquidity and regulation and macro policy are different now, right? Fear can overshoot. So we can have systemic stress. So this chart is not telling you, it does not predict exact dates. It does not guarantee reversal. It does not replace risk management. It shows behavioral pattern. This is why risk awareness matters. So smart investors don't buy green. They study fear. When the index is under 20, long-term returns improve. When the index is above 80, risk increases. Timing is everything. So notice something subtle near 2026. The chart annotation reads price stabilization versus extreme fear. You see the top right, the little white box? That's the key dynamic. If price stops falling while fear remains high, it suggests seller may be exhausted. The sellers are tired. This is often where strong hands accumulate. Bitcoin is no longer isolated. It responds to interest rates, dollar strength, risk appetite, institutional flow, so emotional liquidity now interact. Every cycle follows this rhythm. Disbelief, hope, optimism, euphoria, denial, fear, panic, capitulation, and recovery. So why this cycle feels different? The emotional waves look similar, but what's different now? Well, you have institutional investment, institutional involvement, ETF participation, regulatory clarity, larger market cap. That could dampen volatility or amplify it. Don't forget to subscribe. Don't forget to understand, and don't forget to read.